Hello again, everybody. Doing it from the RFX, Fortune Trading. Taking a look at the pound Japanese yen. Yesterday, I made the assessment that this was going to be the setup based on the nature of the candlestick signals given on the daily chart, where we're going to be forming a consolidation, and that the market was expected to start a U-turn bearish at this area here to create a second resistance point to complete the resistance boundary and to complete the overall pennant consolidation. And now you can see that this U-turn has actually started as predicted. So we're like to see over the next couple of days the market head towards the support boundary at the 129 level. One of the couple of the signals that indicated that we were going to be having that U-turn taking place was what we saw on the 4-hour chart, with large number of setups being formed as part of this previous uptrend, which, as you know, is usually an indication that the trend is gonna gradually come to an end. After 3 setups as part of a trend on any time frame, the market will eventually lose momentum and start to transition towards an opposing trend. We also saw that the market started to move sideways and created a double bottom, double top formation, which is also a strong indication that the market is about to start a new trend. So the expectation was that the market would eventually continue this bearish movement started with this last bear candle and break below this outer uptrend line and head towards this long-term uptrend line on the 4-hour chart. And as you will see here on this time frame right now, this is exactly what has happened, with continued bearish candles on the 4-hour chart leading to the movement that has taken us towards this long-term uptrend line. So this downtrend that is now beginning is likely to continue over the next couple of days and eventually make its way gradually towards the support boundary. So another example of how we can use the power of these candlestick patterns on the daily chart and the 4-hour chart to predict market movements. In this case, the number of setups that were a part of this previous trend gave us the first clue that the trend was about to come to an end. And this was followed by the other signal, which was the sideways movement and the double top formation that started the movement bearish. So the combination of these signals gave us a strong heads up that the market was going to eventually start to U-turn, and this is exactly how it has played out over the last 24 hours. So the market expected to form this consolidation setup with the formation of another bearish wave. And so what we're going to be doing is taking advantage of this movement bearish by looking out for trading opportunities along the way, and capture between 100 and 200 pips as the market makes its way down back to the support boundary.